The rupee is the central story. Today, the Indian currency is down by nearly 0.5%, its sharpest intraday fall in 2 years. The interbank call rate has touched 7%. Basically, what this means is that rupee availability has shrunk so much that banks are borrowing from one another for 1 day at 7%, although the repo rate requires that this rate should be 6.5%. Accordingly, the 10-year bond yield has also spiked to 6.83 from 6.8 overnight close. The 10-year yield was as low as 6.67% in early December, if you remember, when people were betting on 2 to 3 rate cuts from Reserve Bank. Plentiful liquidity after that CRR cut. The dramatic change is quite clearly because of the US jobs data and the sharp rise in US yields and the US dollar. To understand how the Indian rupee and yields will shape up from here on, I have with me Anubhuti Sahay, the Head India Economic Research at Standard Chartered Bank, and Arup Rakshit, the Group Head Treasury, I think Head of Global Markets at HDFC Bank. Arup, Anubhuti, thank you very much for your time in what should be, I'm sure, busy hours for you at at the Treasury. Arup, rupee liquidity is like people are scrambling for money. Can you just describe what's happening and whether we're going to see dollar go even higher?
Thanks, Latha. Yes, rupee liquidity is challenged. Rupee liquidity has there is a decent quantum of deficit in the market at the currently, and obviously you have quoted the numbers, which is leading to that kind of it's being seen there. I think we need durable liquidity. I mean, the 0.5% CRR cut has brought in something, but that has also got absorbed completely. So we need more durable liquidity. So either another CRR cut or an OMO expectation has to come through, because you need that kind of a scenario.
I'll come back on that point. I'll come back on that point in a minute. Arup, Anubhuti, first thoughts. You've already put out a report saying no rate cut, but CRR cut in February.
Yeah, absolutely, Latha, completely agree with Arup. At this point in time, when we are looking at the Feb MPC meet, the priority clearly has to be INR liquidity infusion. Repo rate cut really won't make a difference if INR liquidity by end of March 25 will be at, if it is at 2.5 trillion, if we are looking at headline. Our estimate is that durable liquidity, because of seasonal patterns, etc., can actually move to 1.5 lakh crores of deficit by end of March 25. So giving a repo rate cut doesn't meet the requirement of the banking system, will not help in transmission. So a CRR cut of 50 basis points is our call for Feb meeting. And I think it's just one part of the problem. The size of liquidity deficit is very large. So the package has to be, we hope we see a complete package in terms of, like, say, a buy-sell swap or even an LTRO. I think a lot more needs to be done before a repo rate cut is delivered.
Got that. Okay, before I come to asking Arup as well, what are the liquidity steps? Arup, my prime problem is not RBI keeping liquidity tight by design? Isn't there a fear that plentiful liquidity could also mean that, the rupee fall may be more exacerbated? For the same reason why you don't want a rate cut, maybe Reserve Bank is wantonly keeping liquidity tight, you think, to keep the rupee from falling, the rupee from falling too much?
See, I'm not sure whether that's the thought because of which the rupee liquidity has tightened. The basic fact is the way things are going about, you need that rupee liquidity, otherwise the growth is going to get impacted. I mean, the first half growth was 6.4. There was an expectation that its second half will be more towards the 6.7. But with this kind of a rupee liquidity, that's not going to happen. Now, I also think, the way government balances have been started to be released, it's now moved to a just-in-time technology from a government balances perspective. So that is also impacting. That would additionally use to add the liquidity into the system. So I honestly think there is a lot more. I agree with what she was saying, that RBI needs to do a lot more than just even...
So FX swaps and LTRO as well. That was a new one that Anubhuti is speaking about. I've heard a lot of people talking about OMO purchases of bonds and of course CRR cut. But do you think an LTRO also is called for? Is it that tight? 2 lakh crore tightness today?
It's tight. So let's see which are the operations which they go about.
Okay. Okay.
Whether it's
Anubhuti,
a CRR
yeah.
or there is an OMO which they will address it through. Let's see.
Okay, Anubhuti, your forecast for the currency, you think you will have to already revise it on January 20th? You said that March will be 86.25 and we are at 86.35 already. Obviously, you wrote that report before the non-farm payrolls number. Do you think we are going to see more aggressive fall in the currency?
Another timing timing where rupee will finally end at it has become extremely tricky because a lot of factors are playing at the same time. Initially, we were more worried about the tariff impact. Then the US exceptionalism theme has become far more stronger. This week we have the US CPI as well as PPI, and if they surprise on the upside, then I think that will put further pressure. But I think one of the most important change which we are seeing, and I would say it's a welcome change, is RBI's increased tolerance towards dollar strength. And if this tolerance, is it keeps on increasing because the global environment is changing, and if RBI is realigning itself to the new realities. As I mentioned, it's a welcome move. So yes, on timing wise, we can be, it is tricky. But the broader call is that, right now, a lot of negative news is in the price. Some way or the other, there will be some dollar pullback, if tariff increases are not in line with expectation, or if the US data starts disappointing and market, instead of toying with an idea of a hike, starts again toying with ideas of cuts. So I think that back and forth will continue. But yes, timing the level of rupee for each quarter has clearly become far more tricky now.
Arup, what would be the levels you would watch out for on the currency now?
I agree with her because it's becoming a little tricky, but it cannot be a one-way fall. I mean, I completely see that. I mean, there will be some pullbacks at times. And please understand that oil prices have also gone up sharply today. So the more you allow rupee depreciation to happen, you will be ending up importing inflation. So there has to be a balance which will have to come out. So yes, and at some point, I think the exporters will also start coming into the market. They have been sitting out quite a lot. So whether it's at 86.50 or whether it's at 86.75, there will be levels at which there will be some selling which will start, genuine selling on the export sides.
Well, surprisingly, today the CNH and CNY have not depreciated. Last week we were depreciating in step with the renminbi. Today, actually, the renminbi has appreciated a bit. So that may be a bit of a support for the Reserve Bank not to have to compete with yuan depreciation as well. But you don't want to give any level, Arup?
Sorry?
Any level for the rupee?
No, I think an 86.52 will have the first stop, and then let's see. I mean, we'll have to carefully watch it. It's not something one can predict at this juncture.
I agree with you. Yeah, I agree. Things are moving even as we speak. And last year, the rupee appreciated, or rather depreciated by 3%, as did the yuan. So if we take a 3% from Jan 1st, we can end the year even with 88, if it is just a cut paste of last year's moves. But Anubhuti, will this mean that it is going to be very difficult for the RBI to cut rates? And therefore, what are you expecting in terms of the 10-year bond?
Sure. So our starting with the rupee level, like for December end, our forecast is at 87.75, so pretty close to 88, which you highlighted. And as I mentioned, these are still pricing in rate cuts from the Fed, not hikes. And that is a very important factor when we are talking about the dollar trajectory going forward. Now for the repo rate cut view, given that globally and in US for specific, we are still penciling in almost 75 basis points of rate cut between 25 and 26. We see room for 50 basis points of rate cut by the RBI between April and June. Now, our sense is this is needed because there is a moderation in economic activity domestically. And if this is delivered, then on a 12-month basis, it can provide a relief of 0.15% of GDP to the mortgage loan borrowers. Having said that, the key risk which we'll have to keep in mind is, what if US data continues to surprise on the upside? And what if Fed actually starts hiking. I think if Fed pauses, we still have room to cut rates. But if
Anubhuti, I'll just
reverses,
come back to you. Yeah, I'll take your point entirely. Sorry, I'm cutting because I want Arup also to have the last word on this issue. Arup, two questions. Do you think that a rate cut is now very difficult for the Reserve Bank, despite the softness we saw in last month's data? And secondly, I'm once again asking you this question: is the Reserve Bank not that liberal with liquidity, because that also can, push the dollar higher? Is there a fear that let me keep rupee tight so that you guys want the rupee and you keep those interest rates high enough to prevent too much rupee depreciation?
I think they will have to balance the two out. So I take your point that whether they are concerned on that or not, but they will have to balance the two out. To answer your first part of the question, that whether they will have a cut, I completely agree with Anubhuti. The Feb cut is not foreseen at all. Earliest is April, but it has to be seen of how US Fed is doing. If there is any chance of a Fed hike, we will not cut immediately. So 75 basis is also what we are saying in the next fiscal that will be the repo rate cut will happen. But the challenges are of how US Fed behaves and how the tariff barrier plays out. Okay. So that's
one 10-second question. Do you think on Jan 20th, if the tariff announcements are not very dramatic, I mean, after all, Trump also wants his economy and market to be preserved. If they are milder than what the market expected, the first set of tariffs, do you think the dollar peaks at that time? Is there a good chance that 109.75 or 110 is the peak?
Dollar will weaken. If the tariffs don't come through as the expectations, dollar should weaken globally.
Okay. Well, there are a lot of people out there betting that Jan 20th may not be as bad as the market has expected, and perhaps that's the day the dollar peaks. But there is a lot of trading days from now to Jan 20th, at least 5 trading days. We'll wrap up on Bazaar on that note. Arup and Anubhuti, thank you very much for giving us some context and understanding. But today, the rupee is going to bear watching. We wrap up on Bazaar. Sharpest coming up after the break.